And while ADT is soaring, unfortunately, we have more retail woes for Lord & Taylor and Tailored Brands. That's the parent company of Men's Warehouse, those companies filing for bankruptcy today. So for more on this story, we have Yahoo Finance's Emily McCormick. Hey, Emily.
Hi, Kristen. And as you mentioned, we are seeing the number of retail bankruptcies really starting to rack up during this pandemic period. Of course, with people not necessarily going to department stores and brick and mortar locations to shop, that has been weighing on this sector as a whole. So to break down these bankruptcies, we had luxury department store Lord & Taylor, as well as its owner, Le Tote, each filing for Chapter 11 bankruptcy protections yesterday. This coming, of course, as the company temporarily shut its 38 brick and mortar locations back in March in compliance with government stay-at-home orders. The company is now planning on having going out of business sales at its Lord & Taylor stores in a move to liquidate those brick and mortar locations. Now, just taking a look at the debt load that this company had, it filed with $138 million in debt obligations, and it had employed about 650 workers. If we think about the bankruptcies that we're seeing, and Lord & Taylor is a good example of this, a lot of times these retailers had been struggling even before the pandemic, of course, with this move to online shopping, of course, just trying to keep up with fashion trends. If we think about the purchase of Lord & Taylor by Le Tote last year, less than a year ago, really had been trying to broaden out the audience to a younger consumer. That turnaround plan hadn't really picked up too much traction. And if we think about Tailored Brands, the other company that we also had filing Chapter 11 bankruptcy, that announcement coming in the past 24 hours, is similar to what we've seen with other ones, also struggling to kind of keep up with the times in terms of fashion. If we think about the casualification of office attire, that's been something that's been weighing on Tailored Brands even before the coronavirus pandemic hit the US. So that company also struggling with its reopening process. It had reopened just under half of its stores as of June 5th. Now going over that Chapter 11 bankruptcy process, it is expecting to reduce its debt by at least $630 million. That will be financed by existing debt holders. But if we take a look at that stock, of course, with the potential of those shareholders being wiped out, that stock definitely getting some pressure today. Kristen?
Hey, Emily, I have a question for you. I don't want to make you pull out a crystal ball here, but if you're getting a sense as you're watching a lot of these companies, as you were mentioning, so many retailers having to file for some level of bankruptcy, how many going forward are actually going to be able to emerge from this stronger than before, and how many are just going to fade away completely?
That's a really good question. And if you think about it, Kristen, we've been talking about the retail apocalypse even in the years leading up to this. So really with the pandemic, this is something, as we've been talking about, that's been more of an accelerant with these secular trends, more so than completely shifting the narrative entirely. But with a lot of these retail brands, there's always that likelihood that a private equity company may actually come in and take up some of the assets here. It's really difficult, I think, to say at this point which ones are actually going to have their intellectual property, the brands actually be existent on the other side of this. But definitely a trend to keep in mind here as we continue to see more and more names filing for bankruptcy in the retail space.
All right. Thanks so much, Emily.